trading around $30 a barrel, right there on the nose, lower by more than 5%, or down $1.60. Brian Busch is Director of Oil Markets and Business Development at Genscape and joins us now. Brian, good to have you here.
Thank you.
It's been a while since we've had you on, and since we last had you on, we've learned more about what the level of Russian production is, what the level perhaps of Iranian intentions are when it comes to production, and the United States as well. What do you think now, as it stands, is the level of overproduction and oversupply on a daily basis in the oil markets at this point?
I've really seen absolutely nothing since my last visit with you that makes me think that any of the real fundamentals have changed. I still think we've got overproduction someplace between 1 million, 1.5 million barrels a day. We continue to build crude globally, and just last week we saw almost an 8 million barrel build just in the U.S., according to the DOE. That supported everything we saw on the Gulf Coast and builds at Cushing. This week we see things a little flatter, but overall, the fundamentals are telling me the same thing they were last time, which is there is pressure on the price of crude. It's one of those things that news always change that. You know, you had rumors that really pushed the market up, that
like Saudi Arabia is going to cut blah, 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 which never turned out to be true.
The 5% cut.
Right.
I don't see it happening. I don't believe OPEC is really functioning well. It's very split right now. We've never seen the Russians and OPEC play very good together, and I think the Saudis are very determined to protect their market share and allow the market to shake out the inefficient players and let crude eventually probably settle back to the $50, $70 range, but I think that's a long way away.
You know, Brian, we look at OPEC. Let's assume OPEC tonight comes out and says, we're going to cut output by 5%, you know, and you got the Saudis and the Russians, you know, shaking hands. Even if we cut by 5%, because of the amount of oil in storage, it is going to be what, 6 months to a year before we get any semblance of supply-demand imbalance?
I think it's at least 6 months. You know, if you were to cut 5% out of the market, you're cutting about 4.5 million barrels of production a day. So let's assume that we're looking at 1.5 million overproduction now. Now we're underproducing crude to demand by about 3 million barrels a day. If you think that we have at least 160 million barrels, probably more than that, in excess capacity and storage in the U.S., at least that much, maybe up to double that much worldwide, looking at refining capacity, yeah, at least 6 months to run all of that off, and then supply and demand economics can kick back in.
Do we retest the lows before that?
Right now, I see absolutely nothing that makes me believe that we've seen the bottom. You know,
what number? Would you put a number on it?
You know, I hate to call specific numbers. I did that a year ago at 25, and we got close. I hate to do that again, but I'll tell you this: I will be surprised if something does not change as far as global production. I will not be surprised to see us trade a number in the teens.
Teens. Wow.
You know, Brian, we are back below 30 right now, but let's get back to what you just said, the teens, okay? Because what I'm still confused about, we have too much oil in the United States, and I don't mean this to sound jingoistic or whatever. Why are we still importing a few million barrels a day?
Well, remember, we're still underproducing what we need. In addition to that which we import from the north through Canada, we need about 3 million barrels a day by the water, maybe a little more than that, that's coming from the Middle East, West Africa, South America, and without that, we don't have enough to keep our refineries running at full. So we never got to the point where our crude production is independent. Because we can't get our own oil to our own refineries, correct? Because you can't build a pipeline. We do
you
that
can't build
now.
a pipeline.
No, we get all of the production in North America. We get to the refineries. There's not a problem with that anymore. In fact, pipeline development has taken over 500,000 barrels a day off of rail and onto much safer pipelines for transportation. But North America is still underproducing what our demand requirements are for the refineries. We never became crude oil independent in the U.S.
Yeah, we're still the biggest consumers in the world, and we haven't built a refinery in a very long time. Brian, thanks so much for joining us again. Brian Busch, Director of Oil Markets.